Good morning, good morning, good morning. Welcome to today's morning blast. It is Monday, the 8th of September, all day. You join myself and Mr. Michael Brown, where we will be giving a review of Friday and any news that's broken over the weekend, and a preview of today. And as it's Monday, a look at the week ahead. But before we do, get the legals out of the way. Nothing discussed on the Spaces session constitute trading or investment advice or infers any kind of endorsement by PIQ, myself, Ryan Paisley, or indeed Mr. Michael Brown. Good morning. Happy Monday to you.
Very good morning to you, Ryan. Good morning, everyone. Trust you had a good weekend and ready and raring to go for another
I
trading week.
did. I actually had a week. Well, I say a good weekend. I had a weekend in front of my computer doing a load of stuff for things like tagging of stories and stuff like that. A load of bollocks that no one really cares about, but hopefully we'll be making our platform and our mobile experience far superior going forward. So bear with me on that one. I did notice that as Pepperstone's F1 team of choice wasn't doing very well, they thought, you know what, the only way we're going to get some more camera minutes on the car is to make it pit early and retire from the race. So I see you were obviously on the phone to whoever is running that team and said, look, get him to pull in, please, mate.
Yeah, any accusations of sabotage are wide of the mark. It is quite amusing, though, that, as you say, one of them ended up getting airtime because he had to retire. The other bloke ended up getting airtime because they fucked up his pit stop somehow. But all publicity is good publicity,
Oh, I
Ryan. So
disagree with that
I
statement.
shan't be complaining at all.
I disagree with that statement completely. But yeah, moving on swiftly.
Yes, let's move on to safer ground, at least for you. Where are we this morning? Well, let's go back to Friday, first of all, because, of course, we did have the August jobs report out of the United States, and it was a pretty downbeat report, in all honesty. Headline non-farm payrolls rising by 22,000 last month. That is well below the 75,000 consensus and right towards the bottom end of the range, which was between 0 and 115,000. On top of that, the prior 2 months worth of data were revised by a combined net 21,000 to the downside. So that not only takes the 3-month moving average of payrolls growth to a rather meager 29,000, which is approximately half of the break-even pace, but it also means that as a result of those revisions, the June payrolls print was actually revised into negative territory. And that's the first month that payroll employment in the United States has fallen since the back end of 2020, when, of course, we were dealing with the pandemic. I do say that, though, on the proviso that we are getting the benchmark revisions a little bit later on this week, tomorrow, in fact, so they could, effectively lock more jobs off the totals that we were looking at last week. Other areas of that payrolls report were also pretty soft. Unemployment rose to 4.3%, which is a new cycle high. Underemployment, that also rose to a new cycle high at 8.1%. And I guess the only sort of modest bright spots in the jobs report were firstly that earnings pressures remained relatively contained at 0.3% on the month and 3.7% on the year. And also that labour force participation ticked up to 62.3%. But of course, participation is coming off a very, very low base. In fact, a cycle low in July at 62.2%. So very much a soft labour market report out of the States on Friday. Also one that was very much consistent with what we saw in the July data, which is that the labour market in the United States is essentially stalling at this moment in time. In fact, if the population wasn't getting older, the economy wouldn't be adding any jobs at all. And what I mean by that is that the healthcare sector continues to, by and large, prop up payroll gains as it has done for the last 4 or 5 months. That is also a report that certainly keeps the Fed on track to deliver a 25 basis point cut at their September meeting. But it's also a report that raises the possibility of more dissents in favour of a 50 basis point cut later this month, and also one that raises the possibility that the Fed may well take consecutive steps back to neutral as opposed to moving at the more gradual pace that we had been expecting.
We have seen a few banks, Friday afternoon and over the weekend, come out and say, look, we now think there's going to be a cut in deck as well. I can't remember who it was. Someone might have been Bank of America actually. Weren't officially calling for a rate in September until after this, but obviously they probably were. This
Yes.
last time they updated. Actually, this is a very good point. When you see like a bank or something update their forecasts, you need to be mindful that it's not like they've just decided that. It's just that this is when they're releasing their latest forecasts. For instance,
Yeah,
Sorry, gone.
No, I was going to say, and you're right, and also as someone who does this, there also needs to be a trigger for you to update that forecast,
Yeah,
whether that be a jobs report, whether that be an
yeah,
inflation number, whatever it may be. You can't just sort of sit there on a random Tuesday morning and go, "Well, I think the
yes.
Fed are going to change their mind."
Good
Even if
insight.
you do actually change your view on that random Tuesday morning, there has to be some sort of catalyst for you to write
Yeah,
it up.
that's a very good point. Behind the curtain there. But yeah, so anyone, pardon me, anyone thinking that Bank of America would genuinely thinking that there wouldn't be a cut in September, even when the market was like 85% sure it would be, they probably were 100% behind a cut. They just had no opportunity to state this. But the December cut was new. We've seen a few of those. Also, obviously, I'd be amiss not to mention that BLS non-farm data was nearly delayed, and obviously we saw very significant revisions again. Um, you know, just going to float that out there. You know, for my ADP bros.
Oh
Uh,
God! Right. Well, you
well,
and
look,
that
do you know
one
what
other
though?
person who's in
Say
that camp.
well, tell you what though, if you I'm seeing increased chatter and increased people mentioning, or maybe ADP is the one to be following. But you know, you've heard it here first. Well, for about the last 6 months at least. Um, you know, people they come round eventually. I'm not wrong. I'm
Well,
just very early.
you have at least been consistent in banging that drum. I'll give you that.
Thank you. I appreciate that. Anyway, moving on.
I was going to say, in reaction to the jobs report, the market reaction was very much as you would expect, a dovish repricing of Fed policy expectations. Money markets discount about a 10% chance that the Fed deliver a 50 basis point cut in September. That's just a knee-jerk reaction to the data. It's not going to happen, let's be completely honest. Although we do see about 68 basis points of cuts now discounted by the end of the year. So that's the market fully pricing two cuts and implying about a 70-ish% chance that the Fed deliver a third cut, which would probably be slotted in the middle in October. Other markets reacting very much as you'd expect. Gains seen across the Treasury curve. The dollar sold across the board after the payrolls print on Friday. Gold trading firmer into the weekend and trading at fresh record highs this morning, north of $3,600 an ounce. Equities choppy in reaction to the jobs numbers. Initially, it was a case of stocks rallying on the back of that dovish repricing and lower yields. We then saw equities diving into the red, really. The S&P was down about 1% at one stage, shortly after the cash open, in a bit of a realization that actually a slowing labour market might well be bad news for risk. But then both the S&P and NASDAQ closed as near as makes no difference flat. So I'm not entirely sure we learnt anything especially new from all of that. Away from the jobs report, plenty of other catalysts to mention this morning. Let's start on the trade front. From Friday, President Trump saying, and I quote here, "It looks like we've lost India and Russia to
Looks
deepest,
like
darkest China. May they have a long and prosperous future together." So it looks like if India were hoping for any relief on the tariff front, they're not going to be getting it any time soon. President Trump was also talking about Japan, or I should say the FT were talking about the US-Japan trade deal. Apparently there's been a memo signed as a result of that trade deal, which gives Japan 45 days to find projects that have been earmarked by President Trump into which they want to invest, and that if those investments aren't made, tariffs can then be reimposed. I will get on to why that may be a problem in a short while, but just to wrap up a few other trade headlines first. Trump has been criticising the EU once again. Of course, one of the things that the EU seems to have a bit of an obsession with at the moment is slapping significant fines on US tech firms, Apple, Google, etc. Trump has said, and I quote, "We cannot allow this to stand," and that he may be forced to start a Section 301 investigation into the EU to nullify these unfair penalties.
I
What does
gotta
that mean in
say,
English?
go on. Sorry, finish,
Well, I
please.
was just going to say, just finishing, Section 301 is another tariff provision that the administration can use.
Um,
The argument there would be the EU have imposed supposedly unfair penalties. We are therefore going to impose tariffs to effectively counterbalance that and net the impact off to zero. Go on.
I gotta say though, it does feel rather ridiculous at this point. It's like every week we're seeing some new antitrust or anti-monopoly case from the EU against one of the US tech giants. Yeah, we
Mm.
know they've got billions that are stored away for their kind of cost of doing business fund, which in layman's terms means money to throw at lawyers to settle cases. But it does feel like the EU are aware of this, and they're just like, "Yep, time for another one. We need to fill up our coffers." I would love if anyone can work out how to do it. Probably just ask Rock, I guess, to work out how much the European Union have made off of tech giants in settlements in the past 5 years. Because I think it'll be fucking loads. That's a technical
Yes,
term for
and
you.
there is only one group of people who will have made more than that, and that is all the army of Brussels bureaucrats and lobbyists
And
and
the
lawyers
caterers.
who are, and the caterers and God knows whoever else who is feeding off the EU funds. But there we go. We really don't want to go down that route this
No.
morning. Sticking with Europe, China, they're going to impose a tariff of up to 62.5% on imports of EU pork. So they're not telling porkies about that one. This
Oi.
is part of some long-running anti-dumping probes that China have been conducting, which is slightly ironic given what China have done over the last couple of decades. They're also doing a probe into rubber products that have been coming from Canada, Japan, and India, but that investigation has been extended until next March. Just to be very clear, this is not related to any sort of recent trade dispute. These investigations and probes have been taking place for a number of years now.
Right.
They just happen to be concluding when Trump decides that trade is, the biggest evil that the world has ever seen. And lastly, on the trade front, sort of, but sticking with China, you'll recall, obviously, last week the US pulled a whole load of chip waivers to Intel, Samsung, SK Hynix, TSMC, etc. Basically, this was centering on whether US equipment can be used to manufacture chips in China. Well, it looks like there might be a sort of semi-U-turn going on in this one. Bloomberg citing sources this morning and reporting that the US is now looking at potentially giving an annual quota or permit to some of these companies. Basically, I think they've realised that if they pull these waivers entirely, these plants in China are just going to end up shutting down, and that threatens the entire global supply and chain of chip production. So the US are looking to now get around that by basically saying to these firms, how many chips do you need to produce a year? Here's a permit to allow you to produce that number. Moving on from that and into other bits and bobs, we also heard from President Trump late on Friday. He was saying that Kevin Hassett, Kevin Walsh, and Chris Waller are apparently the finalists for Fed chair. They were the finalists. Then we had this list of 11 people. Now apparently they're the finalists again. God
It
only
is,
knows
it
what's
is The
going on with that one.
Apprentice. It is The
It really
Apprentice.
is. Of course, just for context, and I'm doing this from memory, but I believe when Powell got the gig in Trump's first administration, he was nominated, I believe it was end of October, early November. The current administration have said this is going to be wrapped up in the autumn. So do with that information what
Is
you
that
will, but it
but is
certainly
that a
doesn't look
Rachel
like they're in a
Reed's
rush.
autumn? Is that a Rachel Reed's
Well,
autumn?
it
I.e.
could
November
well be.
26th.
It could
Do,
well be.
do you want, should we just quick before I read out some overnight news headlines? Should we
Well, I haven't
just,
finished yet.
oh, sorry, carry
I've
on,
got
sorry.
plenty more to go here, Ryan.
Sorry, old boy, sorry.
Blimey.
Well, I
Trump
just
also,
wondered, as we've just been talking trade, if it is worth just chatting about the Japan thing, because obviously the one thing, forgetting the resignation, etc., which I know you're about to go on, and you did make a very good notes that I read on Reuters about that. But it
yeah.
must be worth said that the Japan's Board of Trade said that this document that apparently has been signed by the US, it's not settled at all, and that was before the PM resigned. So I don't know if you want to just is it worth elaborating that now rather than come back to the subject?
Well, we may as well, given that you've started.
Well, I just think try and keep some flow.
But yeah, we may as well. I mean, I'll let you say the trade stuff, but just to recap what's
Yeah.
gone on, of course, there was Japanese PM Ishiba has quit as leader of the LDP. His premiership over the last, just under a year has been nothing short of shambolic. They had lower house elections where he lost the majority. They had upper house elections where he lost the majority. I was talking to a client yesterday, I believe it was, and basically I would sum this up to a British audience as the bloke has made Theresa May look like a shrewd political operator, which is quite some tough ask.
Oh, be
The
kind. Theresa May wasn't that bad.
No, she was just very bad at calling elections and trying to get legislation through. Anyway, the LDP leadership election is looking likely to take place on October the 4th. Once the LDP, a very similar system to the UK actually, once the LDP have elected a new leader, there then needs to be a vote in the Diet, which is the Japanese parliament, as to confirming that new leader as prime minister. It's very much likely that that is a formality, given that they have a ruling coalition. But there is, of course, the risk that the new man or lady in the job wants to get their own mandate from the electorate and decides to plump for national elections. The other point that's important to bear in mind here, just before we get to the issue of trade, is that one of the things Ishiba was sort of known for and was trying to do was be very restrained on the fiscal side of things. It's pretty much all but certain that anyone who replaces him is going to be much, much less of a fiscal hawk than Ishiba proved to be. The other thing here is for the Bank of Japan. The BOJ, of course, want to raise rates. They've been trying to raise rates for probably about a year or so now.
And the rest.
Well, yeah, quite. Firstly, it was trade uncertainty that meant they were on hold. Then they had political uncertainty as a result of the upper house elections in Japan. That then got resolved. The US and Japan signed a trade deal, and we all kind of thought, right, here's your moment, boys. You need to, this is the window where you can finally start to get on with tightening policy. And now the Prime Minister's resigned. So it looks like it's going to keep the BOJ on hold for the time being, at least until we've got a bit more certainty on the political front. And then there's, of course, the trade stuff that you're going to mention, Ron.
Well, to be honest, at the moment, there's really not much point mentioning too much about this because obviously everything is up in the air. The only thing I wanted to flag is obviously the US has said sent this memo over, or this signed document or whatever, and Japan basically said, um, yeah, what memo? What you on about? Because it didn't address any of the key parts they were looking for. It's not basically pharmaceuticals and semiconductors, etc., wasn't as expected, and they were expecting far more on this. So that was on Saturday, and then obviously Sunday, the PM resigned anyway. So I think you could be forgiven for saying that Akazawa and his kind of million-mile air miles that he's been doing backwards and forwards, I think he'll be doing a lot more of them because it almost feels like we're back to square one with Japan at the moment.
Yeah, I think you're probably right. And although that deal has been agreed, it now needs to be implemented. And it looks like there's various hurdles in that implementation. And as you say, the Japanese saying this memo is not worth the paper it's written on. Of course, the US are going to take the complete opposite view to that.
Yeah.
And if they do, and you go back to that 45 days that I mentioned earlier, well, you're going to use up 30 of those days trying to find a new prime minister. So good
Yeah.
luck with that one.
But what I will say from the history that we've seen with Trump is that as long as you're willing to be working and seen to
Oh,
be
yeah.
working publicly, and that's the key thing, Trump's administration want to be seeing things out in the open and public so they can kind of prove that they're doing something or at least show they're trying to do something. So if Japan make the right noises, it's almost a certainty the can will be kicked.
Yes, I do agree with that. Sticking with political developments here in the UK, we've had a cabinet reshuffle on Friday and over the weekend. Sort of shuffling the deck chairs on the Titanic. This one, to be completely honest with you, there's no new names coming into the cabinet. It's more a case of the people that were there doing one job have just been moved to doing a different job, and in most cases, not a job that they're particularly suitable for. For example, the new city minister has never actually worked in the square mile. I suppose the headline measures from this reshuffle are that firstly, the Deputy Prime Minister, Angela Rayner, has resigned. She's also quit as Deputy Leader of the Labour Party. Her post as Deputy Prime Minister is now being taken by David Lammy. I'm not even going to go into that one. The key one for markets is that the bulk of the Treasury team are unchanged. So Chancellor Rachel Reeves staying in post, etc., etc. Of course, that is in the lead up to the budget on the 26th of November. But perhaps the biggest ministerial move is one that actually came before Rayner quit. And that is that someone called Poppy Gustafson, actually Baroness Gustafson, has quit as the Minister for Investment here in the UK. Now, anyone who's unfamiliar with that name, she was a founder of Darktrace, the cybersecurity company, led them through their IPO and through a sale to private equity firms. And probably of more importance than that, according to sources cited by a number of newspapers over the weekend, she was the only minister that businesses actually liked and actually could deal with. And now she's not in government
And
anymore.
the
So
scary
that
thing
bodes
is,
terribly.
But to add on to this, and I know this show's probably going to go over at this point, but that's fine because it's all top quality value. To add on to this, the reason why she left, which is the scariest thing, is I can't even say the word, irrecon-
Irreconcilable.
irreconcilable differences with the new members that have just been appointed to the Treasury.
Yeah.
Which this means like Torsten Bell, who gets frothy knickers over taxation, etc., etc. So if you got your investment minister that was like the darling of the city, and someone's actually built up a unicorn, one that businesses want to deal with, if you've got her saying, "Do you know what? Fuck this, I'm out. You lot are a bunch of twats," what does that say? And yeah, very, very grim reading over the weekend for UK PLC.
Yes, absolutely. I think that says it all. Two other things, just very lastly from me before I hand back to you, Ryan. Firstly, OPEC Plus, they are going to be hiking output by
Yeah.
137 barrels per, 137,000 barrels per
Yeah.
day, not just 137 barrels. That will take place from October, and this is the start of unwinding of the next layer of output
Yes.
cuts. So we obviously had those 2.2 million barrels per day that were fully unwound as of September. OPEC Plus now moving into the next layer of their output cuts, although, as always, the key question with that is compliance. They can say one thing after a meeting. Do they actually put that into practice? And last but by no means least, news on out of the Middle East. A company called Mausalat in Qatar are going to partner with Pony AI to deploy
Yes.
robo taxis on the roads in Doha. So we will watch those ones gallop around with interest.
Oh, well done. Well done, my friend. Well, thank you very much for that. I will briefly glance over the overnight news roundup, courtesy of Zach. Do follow Zach. He's up at there on the top row. Well, to me, he's the top row.
Morning,
Um,
Zach.
Morning, Zach. Also, check out the overnight news roundup on our Substack, which is by far the easiest way to get up to date on all the overnight news headlines. Macro news: Japan's economy expanded at an annualized 2.2% in the April-June period from the previous quarter, much faster than the preliminary 1% reading, driven by upward revisions to consumption. The yen and JGBs fell while Japanese stocks advanced after PM Ashiba said he intends to step down. We've gone over this already. The party plans to hold the vote on October the 4th. Money markets are now pricing in a roughly 20% chance of BOJ hiking by the end of October. This was 46% a week ago. Moving over to China, China's exports growth slowed to a 6-month low in August as a brief boost from tariff truce with the US faded, but demand elsewhere provided officials with some relief as they try to underpin an economy facing low domestic demand and external risks. China aims to slash subscription and sales-related fees in the country's $4.9 trillion mutual fund industry. This is to reduce costs for investors and encourage longer-term investment. Also, just on China, because I saw the headline come through on PIQ just before we went on. It turns out that developers are throwing loads and loads of assistance to anyone trying to take up office residencies because apparently the vacancy rate is pretty low. Tariffs and where was I? OPEC we've covered. Standard Charter, they expect the Federal Reserve to cut interest rates by 50% at its September 17th meeting after jobs growth came in far below expectation. One thing to note on Standard Chartered, I believe, in my opinion, these are the worst in the industry, worst on the street, should I say, for coming up with rather outlandish predictions in
Yep.
order to get inches in papers and on Bloomberg and on Reuters, etc. They've been doing it for years. Michael, what's your opinion on this?
No, I was literally about to say exactly the same thing. It
Oh,
just has
hello.
all the hallmarks of a call that a strategist has put together to try and get some PR off the back of it.
Yeah,
And it's a bit shameless, really, because they don't care the fact that they're probably going to be wrong. If they are right, they can run around going, "Oh, we were
yeah,
the only ones to
exactly.
call it." But they've been, as you say, they've done it for years. I mean, look at the nonsense they've been putting out on Bitcoin.
That
It's
was
going to
exactly
trade
where I
to
was about to go.
half a
Yeah.
mil by the end of next year or whatever bollocks it was.
they It's very clear that this is a PR strategy. It's just to print stuff out that they know that enough people actually would like to see happen, and therefore, even if they're wrong, because everyone else wanted to see that happen anyway, everyone feels wrong and aggrieved by it. But anyway, just one to bear in mind when you ever see anything from Standard Chartered. If anyone from
Yeah.
Standard Chartered's listening, I'm sorry, but You
Sort your
make
life out.
you make your bed. German exports, they unexpectedly fell in July while industrial output rose. Wah, wah, wah. UK infrastructure financing deals are on track to hit a record this year as investors compete to buy assets and the government signs off on new projects, according to Infologic data. Well, speaking of UK, I did see a very nasty story this morning doing the rounds about I can't remember what the stat was, but loads of people are withdrawing money out their pensions early because they're scared of what Reeves is going to do in the August budget. But once again,
Oh God.
trade and tariffs. We've obviously covered Japan. We've covered the proposal of annual exports quotas for chip making. So we'll answer for that. European steelmakers, they are urging Brussels to impose US-style tariffs on all imports of the metal, warning the industry risks collapse under pressure from cheap Chinese products and Trump's high duties. Geopolitics, the European Union is exploring new sanctions on about half a dozen Russian banks and energy companies as part of his latest round of measures to pressure President Vladimir Putin to end the war in Ukraine. I guess 67th time the charm when it comes to sanctions. I should have said 69. China appears to be setting up a system on import regular cargoes of liquefied natural gas from Russia, even though this has been sanctioned by the US. A proof that will test the Trump administration's willingness to penalise Beijing in its efforts to curb Moscow's energy revenue. China, they're moving to reopen domestic bond market to top Russian energy companies, signalling closer economic and diplomatic ties with Moscow. That's according to the FT. Again, something to keep an eye on. Equity names, just a few headlines before I hand back to Michael. AppLovin, Robinhood and MCore, they're going to be joining the S&P 500, replacing MarketAxess, Caesars and Emphase. This is effective prior to the open on trading on the 22nd September to coincide with the
The
quarterly rebalancing.
the
Yep.
the bigger story with that is that I think MicroStrategy didn't get included because all of the usual suspects wanted them to.
Oh, this
They
has
were
been
getting very
hilarious.
excited about that.
This has been hilarious. Like that, there's obviously a bit cloak and dagger with anyone that isn't aware of it. I will repost a Bloomberg podcast, but basically, which is very good. Basically, there's a committee that decide who goes into the S&P 500. It's not just based on set criteria and it's all kind of automated. There is a genuine committee that go through a number of names and decide who deserves it. And my guess is that they don't really they can see the writing on the wall, the fact that it might be a bit of a Ponzi in maybe some shape or form. I think that's pretty much the reason for it. And as I did tweet out before we had the results on who was going to be included, personally, I do think it'd be the worst thing that could have happened to strategy, as I feel like it'd be one of these, like, was it Trade Desk or whatever it was that just,
Oh yeah.
that marks the high point, and then everyone just like, why the fuck would I want to be involved in this, especially with the competition for, like kind of access to Bitcoin. Anyway, some Samsung Electronics is supplying Nvidia with large volumes of seventh generation graphics DRAM cards. That's going to Korean press reports as Nvidia prepares to ramp up sales of its Blackwell architecture chips in China. Moving to Australia, their two largest supermarket operators, Woolworths and Coles, could have to pay hundreds of millions of dollars in remediation and other costs following their failures to properly pay staff. And finally, for me, Hargreaves, Lansdowne and Schroders are to offer private market access to the masses. So more things to gamble your money away on. And that's it from me. Back to you.
Good stuff. Thank you, Ryan. Well, in terms of today and the week ahead, then, we do have a relatively barren economic calendar today. We've already had some trade data out of China this morning, both imports and exports coming in softer than expected. But that's pretty much it in terms of the data docket for the day ahead. There's really nothing else on it. There are no notable earnings releases today. And of course, the FOMC are now in their pre-meeting blackout period as well. So we won't be hearing from any of them until we hear from Chair Powell at the post-meeting press conference next Wednesday. In terms of the remainder of the week, just to go through things day by day, tomorrow we get the preliminary benchmark revisions to the establishment survey data out of the BLS. This, to put that in somewhat more layman's terms, is when the BLS revise the payrolls figures for the 12 months ending March of this year. It's likely to see that the establishment payrolls figure revised lower by about 800,000. I think that's very much the consensus. Word of warning with this is that the last time these revisions were published, published. Well, they weren't published is basically the issue. They were about 15 minutes late hitting newswires. In fact, the first person I know to get them was our good mutual friend Mark Bays, who may well be listening this morning. And the way he got them was to ring up the BLS and ask what the number was. So you would,
Basie is as old school as they come for anyone that, well, obviously no one
yeah.
knows who Basie is on this call, but actually Peter Benton might. But yeah, he's old school broker that would have called him out and gone, all right, Shag, give me the fucking numbers.
Yes, so do bear that one in mind. It
And
could
we
be a
love
little
him
bit
for it.
shambolic. That's pretty much all for Tuesday. We do have a 3-year sale out in the US as well. Into Wednesday, we've got PPI out of the States and a 10-year Treasury auction as well. Thursday is going to be the busiest day of the week. Firstly, the ECB. They are set to hold the deposit rate steady at 2%, reiterate their data-dependent and meeting-by-meeting approach to future policy decisions. But the easing cycle is, for all intents and purposes, done and dusted over in Frankfurt. Also on Thursday, we get the latest US inflation data, headline CPI. That is seen rising by 2.9% on an annual basis in August. That would be up from the 2.7% we saw previously. Core inflation, that's seen holding steady at 3.1%. Of course, Powell and co have kind of intimated that they're going to look through any tariff-induced price pressures for the time being. But again, that re-acceleration in inflation just dampens down and pours a bit of cold water on the idea that the Fed would go any larger than 25 basis points with a cut later this month. Also on Thursday, we get the latest US jobless claims data and a 30-year sale wrapping up this week's Treasury supply. And then into Friday, we've got the latest GDP data here in the UK. It is the monthly GDP data, which is a very, very noisy series. Nevertheless, the economy is set to have stagnated in the month of July. That would be a rather a sudden decrease, I should say, from the 0.4% pace of expansion that we saw in the month of June. Also on Friday, we get the latest consumer sentiment data from the University of Michigan. That index is expected at 58, down from a prior 58.2, that being the preliminary September reading. Of course, among all of that, market participants will also be focused on any trade or geopolitical headlines and political news flow as well, of course, not only in Japan, but also in France, where the Prime Minister faces a confidence vote later on today. Bayrou almost certain to lose that confidence vote, and then focus will turn to what Macron does next. But for the time being, that is all from me this morning.
What a great segue for me to now plug the best way to keep up to date with the market moving headlines as they land, which is our new Twitter account at PIQ Newswires.
There we go.
There you go. It's almost like we planned it, and we really didn't. We don't plan any of this. All we get is Michael sends me a list of the bullets we might talk about, and then it's a free for all basically. But that's why you like it, we assume, anyway. But Michael, my dear friend, thank you so much. I'm glad you've had a lovely weekend. Listeners, thank you so much for tuning in as always. We look forward to being with you for the rest of the week. Whatever you're doing, keep it tight, stay safe, and we'll see you all tomorrow. Much love.
Indeed. Bye for now.
Bye for now.